Good morning and welcome to 2023 and to the Coinbase Institutional Markets Call. This is our first of the year and we've had a few weeks break. So we're going to be covering a little bit more this week versus what we would in a normally week. Here is our agenda. We're going to kick off with a market update from Tammy Yao. We're then going to run through trade flows with Greg Sutton, macro and research with David, and Sichikar is going to finish us off with DeFi and Web3. As we go through these sessions, we are going to be focusing on what we've read in the various year-ahead reports for both traditional markets and for crypto, as well as some of the things to keep an eye on, and also what's been happening over the last 3 weeks in crypto. As you all know, crypto is 24/7, so the markets have been rumbling on, and there was a ton of things happening towards the back end of last year that have continued to move forward, whether that's FTX, DCG, Gemini, etc. We'll be covering all of those things and giving you the latest updates with regards to what's going on there. Without further ado, Tammy, over to you. What's been happening in crypto over the last few weeks?
Yeah, Ben, and Happy New Year to all. In crypto markets, we're back to another period of low vol and muted activity as companies wind down into the year end. In the last week, BTC was averaging $15 to $20 million in trading volumes per hour, which is an approximate 50% decline compared to just about a month ago. It does feel like as things slow down again, focus is starting to shift away from the FTX contagion back to macro risks like China's reopening and COVID surge, oil prices, and the usual economic data out of the US. With the new year, hopefully this brings the opportunity for a fresh start for investors. First, taking a look at crypto markets, BTC, ETH, and the DeFi Pulse Index are mostly flat week on week. To illustrate how quiet the markets were, ETH's 10-day realized vol has dropped from December's average of 52% to just 15%, while BTC's has dropped from 31% to 11%. Implied vol has also generally reset lower going to year-end, crushing all hopes for a Santa rally in the last week of the year. I think we could see realized vol pick up again as soon as funds get geared up for the year, and I'll be sure to keep an eye out on key resistance levels, given any break in levels could potentially be exaggerated in current thin markets. As we head into the new year, Ethereum co-founder Vitalik Buterin also shared on Twitter what he is bullish about for the year ahead, in particular, reaching the basic rollup scaling milestone on the Ethereum roadmap. According to him, this means rollups entering at least stage 1 and the launch of the EIP 4884 protocol, which increases the network capacity and reduces gas fees through sharding.
So there's been a ton of action around Sol of late for various reasons. Tell me, what are we seeing here?
Yeah, last week, Sol fell to a low of close to $8, which is more than 90% from its peak. Solana has really had a tough year in 2022. On top of the many network outages it has gone through, it was unfortunately also one of the tokens that were closely associated with FTX, and it got really slammed hard after that. To make things worse, last week, DeGods and Utes, which are two leading projects on Solana, they announced their migration to other blockchain networks. This is notable because, according to OpenSea, both projects accounted for more than 50% of Solana's NFT trading volume over the past 30 days. These projects are now joining Solana unicorns like Magic Eden and Phantom, who had also earlier announced support for Ethereum and Polygon. It does seem like these projects don't have a very favorable view on the growth of Solana's ecosystem and their tokens. After Sol reached its lows, Vitalik Buterin did defend Sol on Twitter, citing the earnest smart developer community in Solana. Personally, I'm not too sure if the rest of the crypto community is convinced by that. Though the price of Sol is now trading at around $11, up more than 17% in the last 24 hours, it's still roughly flat week on week.
So tell me, is there anything we should be looking out for the first week of 2023?
I think there are two things. First, FTX. We are watching ex-FTX CEO Sam Bankman-Fried's arraignment today, where he's facing multiple charges of wire fraud and conspiracy. He's also facing civil cases from Fed regulators, the CFTC, and SEC, so it'll be interesting to see how that turns out. The second thing would be Gemini and DCG. Cameron Winklevoss, co-founder of the cryptocurrency exchange Gemini, wrote a strongly worded open letter yesterday to Barry Silbert, CEO of the digital currency group, asking for answers on behalf of earned users who have had their money stuck with Genesis. Cameron called out Barry Silbert for his bad faith stall tactics and asked for a commitment to resolve the crisis by January 8th. But so far, though, it's not very clear to me how this ultimatum will pan out, given that there wasn't any information on the proposals or potential consequences if DCG does not respond. Markets are surely going to keep a close eye on this one. And with that, that's all from me on the markets update. Back to you, Ben.
Thanks so much, Cami. We'll certainly be keeping an eye on all things DCG, Gemini, etc. over the next few days and weeks. I think what's interesting there is that GBTC and ETH are still trading at very steep discounts, close to record lows. GBTC around 50% and ETH close to 60%. So it's only no respite for any holders of those assets, at least in the short term. Now, Greg, just looking at trade flows and volumes, what's been going on there?
Yeah, so through the holidays and over the start of the year, we saw volumes below trend. That's expected given the time of year. And I also think there's a lot more uncertainty over future price direction than there typically is. Now, for one, at the start of every year, traders tend to reassess their outlook. And while I can make the argument that that isn't very rational, after all, nothing changes when you flip the calendar. It is very natural to do it. We reassess our diets, our habits, and our portfolios. But this year especially, I think we have very good reason to do it. In December, we did get two pretty encouraging inflation prints. So I think there is hope that we're nearing the end of this tightening cycle, which would, of course, be supportive of crypto. Now I've been thinking personally about kind of what my year ahead outlook is. And when I survey the landscape, I think we're going to see a migration towards the higher quality, easier to understand projects. So in my head, that's Ethereum, obviously, ENS, Lido, which recently became the protocol with the highest TVL in DeFi, and Uniswap. And why I think that is twofold. One, you generally have a flight to safety when you have trying times that we've recently had. And also we're seeing more institutions come into the space. And those clients tend to stay away from the meme coins and very highly speculative projects and really favor the projects that they can better understand from a fundamental standpoint. So, very excited to start the year and, see what's in store for us.
Yeah, it's interesting looking at your chart showing here, and for those on the podcast, it's a breakdown via a pie chart of volumes traded across Coinbase, and BTC's at 37%, ETH at 32%, Sol 7.3%, and then the rest are kind of much smaller. It'd be interesting to see if we do start to see a pickup in the unis and Lidos, all those that we do trade as well, as a proportion of total value traded, because as we all know, BTC and ETH have really hogged that for quite some time now, and Solana at one point was an important part of that, but certainly come back a long way of recent days. David, curious to kind of hear your thoughts on that one. I guess more from a crypto specific perspective. Are there any particular narratives that you're hearing or things that you've read in the various reports that I'm sure you're all consuming over the festive break?
Yeah, thanks, Ben. I'd say that overall, most people are still commenting on the speed with which we're seeing the upgrade path for Ethereum. So I think that's going to be a major theme. We actually published on that ahead of the winter break. So if you haven't seen it, please take a look at our market outlook for 2023. And I think that there's going to be some opportunities for alpha. I think with regards to that network, we're also seeing the possibility of restaking, which is still kind of a longer term thing in terms of some kind of revenue generator for validators. But that's something that we should be keeping an eye out for. And of course, the kind of fallout with Solana, I think, is capturing attention right now.
David, do you mind just running through that restaking? How does that work?
Yeah, I would say in simplest terms, restaking is a way for validators to secure new features in Ethereum. So what they would do is use the 32 ETH that they're currently using to secure the network and use that to secure other features. So, one way that, or rather two ways that people would need to kind of put new features into Ethereum right now is to actually have either, putting that into a layer 2 or actually changing the Ethereum network itself by forking it or doing other things in order to actually incorporate it into the network itself. which of course are much more time intensive. Restaking can eventually be a much more efficient way of actually doing that. So how it would work is that validators would actually stake the 32 ETH that they currently have on Ethereum by, setting the, a certain application, let's say EigenLayer, which is a series of smart contracts, as the withdrawal address for ETH, and therefore restake it, and actually allow that to be a way to actually secure a lot of these middleware applications that exist.
Interesting. And I guess what would be an example of a middleware layer, and are there any risks to that? Because the first thing, the cynical side of my brain said was, are we once again kind of adding leverage to the system where we're utilizing assets in more than one place, and is there any danger to that?
I think these are the questions that are being asked right now. Like I said, this isn't something that we're going to see implemented anytime in the short term. I think it's going to take time for people to be comfortable with the technology, to understand how this works. It's definitely one of the more fringe kind of like developments that are happening on Ethereum at the moment, but it's fairly exciting because it could possibly increase the efficiency. And then, you would see that this could be applied to, say, bridges or data availability layers, things like that. But I think for the time being, yes, you're absolutely right. People are still going to have questions about whether this is going to potentially have any concerns surrounding centralization or other issues. So we're going to have to see.
Yeah, this is a podcast over the break, and Vitalik was commenting that his favorite part of 2022 was the merge and the fact that ETH was no longer a large kind of energy polluter, if you like, was a huge positive to him. I guess it feels like more down the same path where if they can make ETH even more efficient and even more deflationary, should be kind of positive for the long term. Is that kind of a fair way of thinking about it?
Yeah, I certainly think that from a system perspective, this makes things much more efficient in a lot of ways. I think that's kind of the goal. At the moment, people are even thinking about whether, for example, instead of implementing dang sharding, we could use restaking as a way to actually, deal with the scalability issues that we have inside of Ethereum. So there's a lot of practical possibilities that could exist for here. But like I said, we're still, I think, at the experimentation phase of this kind of whole idea.
Yep, so certainly more experimentation for 2023, no doubt. And just looking through the various reports, I'm sure that, I feel like there are 1,000 pages of 2023 predictions in crypto, all incredibly well written, to be fair. The ones that kind of really stood out for me that I guess got me excited were the summaries of the L2 infrastructure and how there's kind of more transactions on L2 than ETH Layer 1 now, which I thought was really interesting, and excited to kind of see where that goes. David, I guess what were some of the favorite things that you read from these reports?
Yeah, I think the L2 situation is a good one, particularly since I think there's a big question right now about the competition among L1s and L2s against Ethereum. And, I think that people are still kind of positioning the idea that Ethereum has a pretty solid upgrade roadmap against the idea that these other L1s are still coming up. I think that we're still going to need to see what kind of develops here. I don't think that we're at a place yet to call any winners or losers. Obviously, Ethereum has the first mover advantage, but we're still going to see Sui is going to have a launch probably in Q1, for example. That's going to be pretty interesting to see whether those developments are going to be meaningful. I think you rightly called it as far as L2s. Certainly we are still trying to unlock the value of ZK rollups and ZK EVMs, as well as, optimistic rollups can't be forgotten about. I think they've made major strides over the last couple of months. So all those things, we're going to see this kind of race now to see who's going to become the application layer. And we've certainly moved away from the, fat protocol thesis to the fat application thesis. I think that, this has been ongoing for probably the last year or so, but it's certainly coming to a head right now.
Yeah, we're certainly looking for that elusive, traction where a protocol or an app is kind of really being used for things other than speculation. Sid, I'm sure you've read a ton. What were some of your biggest takeaways?
Yeah, I mean, a couple of the big ones, similar in a similar vein, as mentioned before in previous calls. But while DeFi as a whole experienced quite a big contraction in 2022, I think it was approximately 75% reduction in TVL, a large part driven by Terra. There are some pockets that are looking pretty interesting, including derivatives products, which was a kind of similar trend we saw in the last bear market with BitMEX exploding in popularity. In a similar vein now, as more people move on chain from centralized exchanges, there's a potential for products like GMX and DYDX and PERP and Squeeth and others like it to gain more traction and market share. And then the other kind of headline number that popped out at me from some of these reports was the amount of capital raised by NFTs and gaming as a sector in 2022. I think it was from the block. They cited it was $8.3 billion in 2022, which was a record amount. And a lot of these were at the seed stage. So it would be interesting to see whether the whole metaverse gaming side of things actually arrives at a good product market fit product in 2023 and see if something catches traction and user attention.
Did the block give an outline as to when that money was raised? Like, was it kind of mainly Q1, Q2 that the majority was raised, or was that relatively even split over the year?
Yeah, primarily towards the first half of the year. Obviously with peak mania, NFT mania going on. But regardless, I mean, the money was raised, right? And so we're expecting probably some sort of launches coming up in the following year. A couple to keep in mind are the Sandbox, which is doing a metaverse type play. And then also, of course, the Yuga Labs empire with other deeds and other developments coming up.
Yeah, sure. And then just going on to your thought around perps. So GMX is an interesting one. I had to play around with it in the holidays, and it's certainly an interesting protocol. And it was forced me to obviously bridge across to Arbitrum in order to play with it. While I could do it, I felt like the user experience there still needs to be improved significantly for people to do it. It's certainly not as easy as a centralized exchange, for example. I guess, is that something that these teams are working on, or is that something that most people can just deal with, do you think?
Yeah, I think it's kind of the natural progression for some of these products to expand market share. But it also, the counterpoint to that is like with the remaining active participants that are there remaining in the ecosystem, a lot of them are kind of sophisticated participants who are looking for every bit of leverage to squeeze out in this kind of low volatility time period. So there's that case as well where they want more sophisticated trading tools and more options and more products to gain leverage on. So two different streams of development.
Interesting. And Greg, you mentioned Lido and kind of the easier to understand DeFi projects as ones that we're probably going to kind of gain traction this year. And any other favorite bits from reports that you read over the break?
Yeah, I saw some very optimistic price targets for Bitcoin.
Okay, how optimistic are we talking?
I saw 100,000. Wow. Yeah, sometime in early 2024. Now, I don't know if I fall into that camp, but given the year that we had in 2022, I think it was nice to see some optimism out there. So yeah, I did like that one.
Yeah, I think on the optimism side of things, I agree. I'm probably not near the 100K level, unfortunately, for 2023 or probably some part of 2024 or many parts of 2024. But the just reading some of the Wall Street year aheads, I was actually slightly constructive on kind of how they viewed a lot of the outlook for 2023. It felt like we had so much pain in 2022 that a lot of markets were trading at relatively kind of dislocated levels. I think one of the head of credit for one of the reports was mentioning that some of the high yield was trading that as if defaults were far higher than historically they ever have been, and also kind of what the data is showing at the moment. So, and just in general, it felt like we have a bunch of known unknowns, be it China, be it Fed inflation, et cetera, and be it Russia and Ukraine. But in general, it felt like, as per normal, markets are ahead of the real economy, and the job market is still relatively strong. And people were much more constructive across almost all asset classes than I was expecting. And maybe that's me just being really bearish, I'm not sure, but it was certainly slightly better than I thought. What did you think, Greg?
Yeah, I think that's what makes like right now today rather difficult. Is you're right, there absolutely is some optimism across risk assets going into 2023. But there's also a lot of landmines out there. For one, equity valuations are still relatively high, especially going into what more than half of economists expect to be a recessionary year. We don't know what's going to happen, obviously, with this war in the Ukraine. Bonds are at a very depressed level. Treasuries had their worst years, I think, on record, or at least going back to the 1970s. But again, we don't know how fast inflation is going to come down, or how long rates are going to have to stay high. So going back to what I said earlier, I think all of these reasons are why we're seeing a lot of kind of uncertainty in what the future price action will be. In fact, I've seen some banks say they expect risk assets to sell off in the first half of the year and rally in the back half. I've seen other banks say the exact opposite. So, I think we'll have to wait and see how this month and February and the first quarter plays out. But again, that's why I'm much more comfortable being in the higher quality assets. I think Fido is a great example. Like they're printing, I think they said $1 million a day in fees. So, from a fundamental standpoint, that I think is a pretty decent place to be.
Yeah, I totally agree. And I'm gonna, it's something I mentioned in our kind of outlook in our final call of last year. I think anything that's producing revenue, and you can kind of clearly see that, I think will be beneficiary this year, just as people focus on revenue and as opposed to growth. David, curious, what have you been seeing? What have you taken away from some of the reports from banks, et cetera?
Yeah, with respect to what Greg said, I think there is a lot of questions around whether we're going to see a rally in the first half of the year or the second half of the year. I do think it's slightly more consensus to see that the rallies are going to happen in the second half of 2023. I also think that a big theme is that we're going to see a weaker dollar this year. Now, the issue with kind of these consensus trades is that I think people kind of feel uneasy about being positioned one way, particularly since once positioning gets that heavy, the risk is that something could come along and just kind of blow the whole thing up. Now, that's, kind of a myth in a lot of ways, because when you kind of look at consensus versus contrarian trades, typically actually consensus trades do a little better because it tends to be the wisdom of the crowd in a lot of ways. But I think in this case, certainly the expectations that we have for this year that, for example, the Fed's going to pivot because inflation has already peaked, and we're going to see that there's going to be a lot of challenges to kind of getting inflation any higher from here. I don't think that that's necessarily a done deal. Like personally, I do think that inflation has peaked, but I think there is that risk that inflation is going to be, unfortunately, possibly lumpy. And as a result, I think that's going to affect how the Fed kind of makes their decisions. Now, I'm gonna kind of cut into the macro section that I usually kind of do, and kind of suggest, look at also at the way recessions are going to look in 2023. We recently got these comments from Kristalina Georgieva from the IMF, suggesting that we're going to see about a third of the world's economy in recession in 2023. And she thinks that it's going to be a really difficult year for all the major regions. So the US, Europe, and China are all going to face a very difficult economic year. She thinks it's all going to be weaker, but she did differentiate the fact that she doesn't believe the US is actually going to be in recession. Instead, it's actually just going to be Europe and possibly China. So I think that that could be also a very difficult setup for the views that people have about the US dollar, because if on a relative basis, the US economy is doing better than Europe or China, then that actually puts the US dollar potentially in a stronger position, which actually hurts a lot of risk assets, crypto included. So that's something that we have to keep in mind.
What do you think? Do you think it's a shallow, medium, deep recession? Where are you sat on that one?
I still think that, well, as far as the U.S. is concerned, if we do see a recession, I do think it would be more on the shallow end, and that's just because of where we are in the labor markets, where we are with respect to housing prices and other things. But that's kind of the world as it is today, because right now we're talking about around 10.5 million jobs available for job seekers compared to 4.4 million in the last recession, for example, or comparatively where savings are with respect to house prices and other things. But, I think we're already looking at potential change in that scenario, given how high rates are. It's difficult to kind of pick up mortgages at the moment. I would still say at the moment, we're still looking kind of at a shallow kind of recession, but anything could change at a moment's notice. Now, Europe's a little bit different, China's a little bit different, and of course, that has to do with energy prices, what's happening in China with regards to the zero COVID policy. So I think that all of that kind of makes it really difficult to kind of predict how those regions are gonna face the year ahead.
What do you think, Greg? Shallow, same question. Shallow, medium, deep?
I could almost be in the U.S. escapes recession, just again, given where the labor market is. And again, those encouraging inflation prints. But, that would definitely put me outside consensus. So I think if we do have a recession, it will be on the shallow side.
Yeah, it feels like we're still looking at the same things we were looking at in the back end of last year. And as much to your point earlier on, as much as we'd love to have a clean slate to start 2023, it's just not the reality of it. And all eyes on the Fed and various commentary from them and Russia, Ukraine, and China, et cetera. So one to continue watching.
And one thing too, Ben, is that we kind of got to watch the weather, because I think we have to remember that towards middle of 2022, it became a lot more difficult to actually get food in the world, and we're still dealing with geopolitical crisis in Ukraine. Harvest seasons have been affected negatively by just difficult weather patterns, making things hard to kind of acquire wheat and even foodstuff for livestock animals, So I think that is also going to be difficult, and we're not going to see it probably in the first quarter of the year, but probably getting towards the middle of the year, we're going to recognize that that's going to also give us a lot of challenges to face.
It feels like one thing, if I'm hearing correctly from all of you and from the rest reports, it feels like 2023, fingers crossed, can't be any worse than 2022. I mean, famous last words, but let's hope it's a little easier for asset prices. Now, what about Web3, Sid? What's been going on there? What have you kind of been looking at?
Kind of two big trends. One is, as kind of earlier mentioned, the rise of the liquid staking derivatives narrative will probably heat up as the year goes on and the Ethereum network upgrades start to bear fruit. The big one looking out for is in March, when ETH withdrawals will start to get unlocked. So that's one big sector to keep an eye on. But then the other one is, in more recent times, has been Solana. It's continued to face quite a bit of headwinds from the FTX and Alameda collapse. The price briefly dipped below $10 to around $8.5 over the New Year's weekend, as around 30 wallets that were linked to Alameda and SBF started to move funds and sell Solana. And of course, people refuted this, et cetera, but the wallets were still linked on chain. There were plenty of observers. So something to keep an eye on. And the TVL of the chain has dropped over 25% over the course of the last month, which is even more than before, with several projects migrating, as Tammy mentioned.
And Sid, if you want to go back to your first thing around kind of the ETH unlock, hopefully coming in March, all being well, like what sort of behavior can we expect then? Do we expect to see a lot of people unlocking their ETH, or you think kind of the people that have locked up their ETH are probably really happy to keep it there and continue to receive the staking yield?
I think it's probably the latter. Firstly, the unlocks are not all at once; it's kind of staged. But with the kind of adoption of some of these large liquid staking derivatives, they're becoming embedded in many different products within DeFi and other areas, and they're also going cross-chain, right? So one thing to call out with regards to liquid staking derivatives is Coinbase staked Ether. At the start of December, there was around 900 ETH staked, and today we're at over 1 million ETH. So just even in ETH denominated terms, it's growing, and it has grown over the holiday season. So it reflects more user trust and just kind of user behavior in terms of just like stake and forget, especially as ETH kind of becomes more lindy, right, as time goes on.
Yeah, for sure. And then back to the Sol stuff. I mean, this movie continues to get better and better, and like whoever's got the rights for this is gonna do very well, I'm sure. Like, what are your thoughts around like those wallets and whether or not it was potentially SBF? And then second question is the Solana ecosystem. Is there still a lot going on there? Like, are there still people building? Obviously, Tammy mentioned a couple projects moving across. Is that them being pragmatic and just thinking, you know what, the more chains that we're connected to, the bigger our TAM, our total addressable market? Or is it more so them perhaps losing faith in Solana and moving across to Ethereum because they just don't see any value in the kind of what Solana are selling any longer?
Yeah, two great questions. Well, with regard to the wallets, it's hard to know obviously exactly who is behind them, but on chain, there's plenty of observers who linked them to Alameda and SBF wallets, especially FTX deposit addresses of Alameda. So even if it wasn't directly SBF, but it could have been other associates linked to that entire corpus of entities there. And then with regards to Solana, over the course of the past year, they held several developer conferences, large ones, where they recruited a ton of developers over to their ecosystem, their programming language. So there's definitely been a lot of developers onboarded. Unfortunately, the DeFi ecosystem was so tied to Alameda being the primary market makers and liquidity providers that it's suffered quite a shock. But I think there's still a core developer base that continues to release products, and we'll see more products released on the chain. Somewhat of a fun one, not really anything huge, but maybe it might develop into something bigger. Over the last week, there was a meme coin called Bonk, which is a dog coin released on Solana, which has over 8x in the last week. And it's, it was 70 million market cap now, and it's growing as we speak. So there's a bit of a community forming around that. Most of the DeFi apps are also supporting it on Solana, so we'll see where that leads. But yeah, we'll see. There's still a core developer base, right? So we'll see what they produce. That's the big takeaway here.
Okay, so to talk us through it, what is the utility of Bonk?
It's a meme, right? But it's the first Solana dog coin meme, and I think it has pretty strong community support. Launched in New Year's, etc. So we'll see how much staying power it has.
And will that be like, I guess, similar, like it's a means of exchange? That's like the longer term vision, or yeah.
Yep, exactly.
Yeah. So just hopping in here, obviously a lot going on with Solana. My personal view is I think they have a very, very tough road ahead of them. What is really going to get crypto moving is true utility. And none of us, I think, know exactly what that's going to look like at this point. But if you're a corporate that wants to bring a project onto, into the crypto ecosystem, I find it very hard to believe that they're going to pick that chain, rightly or wrongly. I think just because it's so associated with, the current bankruptcy that's taking place. So, I hope I'm wrong there, but I think from a risk reward standpoint, I'm not sure how big of a position I'd want in that token at this point.
Yeah, I kind of agree, right? It's hard to talk about using Solana, or certainly harder now in a bear market where transaction costs on L1 and not hugely high. Obviously, in a bull market where it's super expensive, like L2s make a ton more sense, as do other chains. But right now, it's actually relatively efficient to use L1. And obviously, we spoke about L2s earlier on. They provide another option, albeit with maybe not the best UX yet, but there's a ton of teams working on that. I'm not sure when the next developer conference is, Sid. I don't know if you know, but I feel like that's going to be a really good leading indicator to figure out what the long-term success of Sol is. I think the last one, correct me if I'm wrong, I think they had 4,000 developers there in Lisbon. And if they can get close to that again, I think that's a hugely positive sign. But I'm unclear how many people remain on Sol or in the space entirely. I think one thing just to call out there as well, actually, Chris Baniski, who is kind of a crypto OG, very smart. He actually wrote a great book on understanding digital assets back in 2017. It's one of the first ones that I read. And he's actually kind of turning a bit more bullish on Solana and been very public in various Twitter threads. It feels like he's getting relatively close to the kind of the developer ecosystem, and also has been speaking to Vitalik about it as well. So there's certainly some smart people that are looking at it and are trying to figure out if there's value there. And if there is, then this is potentially trading at very interesting levels, but it just requires a ton of work to figure out if that is the case or not. David, I'm curious, like from kind of your perspective and your conversations with various institutional clients, is Sol coming up a lot? Are you getting any kind of concerns or pushback or anything like that?
Yeah, I think Solana does come up a lot because it had been one of the darlings back in late 2021, and we didn't really see it extend that in 2022. I mean, you've even seen that its market cap as a percentage of Ethereum's didn't really grow. In fact, if anything, it declined in the after peaking probably in the first half of 2022. I actually think it might have even peaked somewhat sooner than that. So, there's obviously been focused on some of the downtime it suffered. It's obviously been in beta for a very long time. It's still in beta. So I think some of that is, part of its growing process. It's still not, it still hasn't fully launched in terms of being a main net kind of network. But I think people forget about that. People think that this is the final version of Solana, and it's not. There's still a lot that it kind of needs to kind of build on. But certainly, the loss of Serum, the focus that it had actually on doing, using that as a platform for liquidity for many of the applications on the network, I think definitely was a big loss and a big hit to it. So I think it's definitely in a process of retooling right now. I'm not sure how many investors are necessarily aware of that, but I think that's important to consider. So, I'm not ready to kind of say that, the FTX debacle was kind of the end for Solana. I think that there's a lot that it's still trying to build, and there's a lot that's good about it. But it kind of goes back to the whole conversation again about, competition among L1s at the moment, because we're, as I said, transitioning away from focusing on just the platform to focusing on all of the applications being built on a platform. So that's kind of where we are in terms of, this place as far as the ecosystems are concerned.
Yeah. Well, I hope regardless they get a fair shot at success, and all of the baggage that came with being connected to FTX, etc., doesn't hold them back too much. Cool. Well, I think that's a wrap for this week. Thank you all for dialing in. And as ever, if you have any feedback, please reach out to your Coinbase representative. And otherwise, happy 2023. Wishing everyone a slightly easier year than 2022. And otherwise, have a great week.
All statements and analysis correspond to the date of this recording. This recording is only intended for sophisticated investors. This recording should not be copied, distributed, published, or reproduced in whole or in part. Neither Coinbase nor any of its affiliates make any representation or warranty as to the accuracy or completeness of the statements or any of the information contained in this recording. The views expressed in this recording are not necessarily those of Coinbase. Coinbase is not providing any financial, legal, accounting, or tax advice or recommendations. The receipt of this recording by any listener is not to be taken as the giving of investment advice by Coinbase to that listener.